wonder, has volatility left the building? Yeah, has volatility left the building? Let's move into the next slide. Like Elvis.
Volatility never. Yeah, volatility leaves the building for like a short little lunch break, stuff like that.
Yeah, don't give everybody answers to the test already. CPI showed inflation cool for the 6th straight month, and as a result, yesterday's CPI was pretty muted, and I think you got to wonder if we're going to start seeing more and more muted ones, right? Like, this hasn't been a metric. We've talked about this before. This is not something that's been happening forever. This is a more recent phenomenon that we saw out of these CPI reports. Yesterday was fairly quiet. We'll see what the next ones bring, but as a result, the CPI report is basically showing that the Fed's probably going to start to calm down. It's about a 90% chance of a 25 basis point rate hike in February. We'll see what that leads to. Talk about calming down. Bitcoin seems to have been calming down for a while. Volatility was starting to calm down after FTX, and now it's around that 18, 19K level, which is the first time we've seen that since the beginning of November. Dollar, which has really been one of the things over the past year, right? Like, dollar was going nuts. It was destroying markets. Well, dollar's at 6-month lows now, and yields of all durations are down for the second consecutive week. So another thing, those two things obviously were going crazy for most of last year, which was obviously pushing stocks down, but now we're starting to see some equilibrium a little bit. And then VIX, as of yesterday anyway, closed at 1883. That was down 10% on the week, 9-month lows, and VVIX still around 4-month lows. So volatility has contracted quite a bit. Let's move ahead to the next slide. This is, don't worry about the names on here. If you can see them, cool. But the point is that, you have a red line here at 20 IVR, and you have the pink line at 30 IVR. As you can see, not a whole lot is above 20 right now. Like we said, volatility is pretty low. These are a lot of the major ETFs that we look at. SPY, IWM, and Qs are circled in red. But you also got, GLD, you got, various other XLE, you got various other ETFs. Shows you IVR is fairly low right now. And I think most of the people know this. You guys know it too. I saw you talking about IVRs this morning, and people are saying they're seeing some IVRs in the single digits and the negative. I mean, this is kind of, where we are right now. Just things are fairly low. TLT is one that stands out. I think FXE is off the charts. Those are the two, I think, ETFs that are fairly high right now.
Yeah, that's a good find, because if you're looking to avoid earnings and you're looking to go to the ETFs, you can't find it in like IWM or the Qs or SPYs where you normally would go.
Yeah. You had something, Tom?
I was going to say FXC is just a tough,
It is a tough trade.
That's a tough trade with low vol. It's really tough.
Yeah. Yeah. Right. Oh, yeah. Low vol overall. Correct. Yes. Yes. I'd probably prefer to trade actual euro vol versus, probably. Well, that's low too, honestly.
Mm-hmm.
Whatever. Let's move to the next slide. Again, same story. This is the VIX futures curve over the past 4 weeks. The blue line is where we are currently, with the near term just below 20. But you can see it's been a consecutive thing over the last couple of weeks as vol has started to contract. So, these things change. Like Tom said at the top of the show, we're going to see this change. We're going to probably see at some point, maybe, I can't say probably, but maybe some point this year, this VIX futures curve turns into a backwardation one. Who knows? Or gets flat. At the very least. But for now, this is classic contango, and we haven't seen it in a while. Or even when we have seen it, it's been higher. There were times, as you can see, like look at December, right? The whole curve was above 24, but now most of it is below 24. So That's where we are.
Yep.
Let's move ahead. And another way to look at it, like I said, volatility is just blah. This is the implied volatility risk premium, where you look at the difference between expected volatility in VIX and historical volatility, which is what we've, experienced recently, the movements that we've experienced recently. And you can see it's right at 0. Usually you want this metric to be in the 5 to 10 range, because that lets you know implied volatility is big and there's actually some premium to harvest by selling. But right now it's fairly low. So overall, it just says there's better opportunities probably ahead. And in the meantime, this is a good time to pay attention to that chart that we always talk about, where you talk about VIX versus, your buying power and the levels of VIX based off of your buying power, how much you want to have at play in the market or not. Let's move ahead.
I like the term blah.
You like that? Blah, blah. Yeah. We talked about Bitcoin. It's starting to move in tandem with tech stocks once again. I mean, this is the first time we've seen that since FTX. That was a large part of the story over the past year and change. These two kind of moving. It was a lot of the same money. That changed, right? After FTX, nobody really wanted to touch Bitcoin for a while, and it was kind of flatlined. But yesterday, this past week, they've kind of started to move together again. So we'll see if this continues or not. Who knows? Let's move ahead. One more. You guys doing anything with gold recently?
No, but I was telling Tom, it's had a sneaky little move, hasn't it?
Yeah, it has.
Yeah, the Ivy rank's been so low, we just haven't had any positions on in gold.
Yeah, and if you tried to fade it, you got run over. I mean, we're not usually the guys that, buy high and sell higher. We're usually the guys that sell it high and try to buy it lower.
Yeah, sure. With the low IVR, it's kind of kept us out of harm's way.
For sure. And I mean, as we've seen dollar started to retreat some, you see gold has been one of the bigger beneficiaries of it. It started to rise, spot gold rose above 1900 this week. I was talking with Vecchio about this. Like, I'm probably more interested in gold if it gets to, a bigger move, maybe around 2000. You see some volatility pop, maybe. But for now, I've just been watching it. Like you said, it's had a sneaky little run. Got my eye on it. But
and it's kind of weird that a commodity to the upside hasn't caught a volatility bid to it, too. Usually a commodity to the upside gets bid. So I don't know. You may need a move above 2000 or something like that, or a continued move. I mean, it's had quite a move already from 1600 and change to 1900 and change. I mean, I don't know what's going to move vol in there.
I know, right? I mean, that's kind of what I was getting at too. Like, I like to see, especially in commodities, I like to see a breakout or a breakdown, and those usually coincide with some volatility. And I guess this move has just been so slow, we haven't seen any volatility.
Yeah. I
don't know. It's weird. Anyway, something to keep an eye on. This whole gold thing more recently, especially the dollar doing what it's doing.
Yeah.
Let's move ahead to the last slide. Macy's and Lulu this week actually came out with some warnings. Lulu had a pretty decent drop, and I'm wondering if this is like the beginning of some type of interesting thing we're going to see in retail where it's going to lead to some volatility. These stocks coming out saying there's issues with their inventory and what have you. So I'm going to keep an eye on some retail names as we head into earnings and see what they end up doing. Microsoft is considering a $10 billion investment in ChatGPT. What do you guys think about this?
I don't blame them. I think it's, if you're Microsoft and you're sitting on, you're $1 trillion company, a $10 billion investment in Chat GPT is nothing.
A lot of kids are using this in college. You know that, right?
A lot of people are using it everywhere.
Yeah, for sure.
Pretty cool.
It is pretty cool.
Consumer credit just used it for this presentation.
Shh. Don't say that. Consumer credit increased more than expected in November. So this gets to the idea of what's going on with the economy, right? Like, if people are starting to use more and more credit, is this going to create a situation once we do start seeing jobs change? If that happens, right? Is this going to lead to an issue overall, to create overall volatility in the market? I might be reaching, but we'll see. Is this the end of a rally? Well, I think I answered that question. This was last night, of course. Most shorted stocks had rallied for the 5th day in a row. So you're talking about your triple BYs, your Carvanas, your Big Lots, your Warbies, SI. These are some of the bigger shorted names in the market, in my opinion. And we should do a study on this. I've always noticed after we've had a rally of a couple of days, and you usually notice those last 2 days, the shitty stocks like these start to rally pretty hard. We saw that yesterday, and usually that's like the end of a rally, right? Like, I've seen that a lot. And so I don't know, apparently it just happened again. We'll see where the markets end up today. But
it sure looked like it yesterday that they came for all the crap.
Yeah,
you're talking about like the BBYs, the AMC, all the stuff.
Carvana, everything you wrote here. I mean, they came for all the garbage. That looked like a short-term top.
Every time, dude. Like, it's amazing. Every time it seems to happen.
Yeah.
And then finally, research of the week that was interesting. On Jan 12th, we had that OJ, or yesterday, why we trade often. Check that out, people. See what you think.
Very good. Good job out of you. Hey, listen, let's take a quick 90-second break. We're right on time. We'll come back. We got more Tasty Live coming up next with the opening bell.